5 important investing mistakes to avoid, whether you are a beginner investor or an expert. This is for everyone. The first mistake is a general mistake and also an important mistake. And that is not starting at all, or even if you have started, but you stop. Remember, investing is a great way to build wealth, but it is a long-term game. Investing is a long-term wealth generator and builder if you do it correctly. It is awesome. There are 2 strategies that I love. The first one is dollar cost average, which basically means if you love a company and you invest in the company and you're in it for the long run, you buy more when the share price dips. So let's take, for example, you want to invest in company X, but then you invest only 50% now, in 2 months another 25%, and in 4 months another 25%. And even in the future, once the share price dips or there's healthy pullbacks, you buy more. The reason why people dollar cost average is to actually get a better average purchase price for your overall investment in that company. So it's just basically saying you are consistently investing in that company as time goes on and with dips to lower your average purchase price. The second strategy you can consider, which is actually one that I love, is to actually force yourself to invest on a monthly basis by making a recurring investment from your bank account into your investing stock portfolio on a monthly basis. That forces you to invest on a monthly basis, and it actually creates automated discipline. But remember, investing is a long-term game. Stocks go up and they go down. It's all about the long run. The second mistake is buying because of FOMO. And I'm also guilty of that. I've also done that in the past. And I probably still will do it because we are human and we make human mistakes. FOMO is the fear of missing out. And it is impossible to perfectly time bottoms or tops of share prices. But investing in something because everyone is talking about it, or it's trending on Twitter or on YouTube, or because it's just going up insanely, it would potentially, and most often it ends in tears. Nothing goes up in a straight line. Better opportunities will come. If you missed a bus, learn from that, but don't necessarily just rush in because of the various factors that I just mentioned. Opportunities will always come. There's always going to come new opportunities. So just be patient and don't rush into something you don't necessarily understand. Now, how do you spot FOMO? Or before you make an investment, how do you really ask yourself, is this just FOMO? Well, that's difficult, but if you are anxious to just buy something and not really understanding why you are buying it, that is a potential sign that you are investing because of FOMO. And that brings me to my next mistake that I listed. And that is not understanding what you are investing in. It is difficult to understand every company out there, but that's fine. You don't need to. You only need 1 or 2 or 3 companies in your life to make you rich if you stick to it for the long term. Things to look out for to understand a company is, for example, what problem is the company solving? How are they solving it? Who are they solving it for? Who is the team solving it? And what is the track record? Are they making money and is it growing? Is the company suitable for your risk appetite? And a few more. So the risk appetite is, for example, value stocks is more for low risk appetites. High growth is more for high risk appetites. My next mistake that I listed was making emotional decisions, and that's probably the biggest lessons that I've learned in my, I don't know how many years now, but emotional decisions can really also end up in a bad decision making process. Usually, or in my previous stock portfolio history, when I sold a share because I did not truly understand why I was actually selling, I was just selling because of some emotional thought, the share price went up after I sold it. Not always, but so many times. And then I was actually regretting, why did I sell? And I couldn't even answer myself. And when I sold, it went up. But when I understood why I was selling a company and it was an original plan, or I really understood why I was selling the company, it often played out well. So when you sell a company, or you just buy because of FOMO, or sell because of somebody's stock pick or whatever it is, it's often an emotional decision, and emotional decisions can end up badly. Now, how do you know when to sell a company? Well, it is difficult, but we'll do a video on that separately, so make sure you are subscribed. We're also going to release 2022 stock picks, so make sure you're subscribed for that. And then a last mistake to avoid is actually a difficult topic, and you can actually let us know in the comments. Are you a fan of diversification, or are you against diversification? So there's the argument between under-diversifying and over-diversification. If you're under-diversifying, it's more risky, and no one knows what will happen tomorrow. If you're over-diversifying, then you have lower risk, but then two things. Why don't you just buy an ETF? And second of all, it is almost impossible to understand 40 or 50 different companies if you invest in so many. Because remember, you need to stay updated to the companies you are invested in. Because if your money is invested there, you are invested there, and you have a stake in the company. So let us know, over-diversifying or under-diversifying. The sweet spot, in my opinion, is between 7 and 12 companies in total. So that's just my personal opinion. Let us know how many companies you think you need to have in your portfolio. So that is the 5 mistakes to avoid. Just to run through them once more, it is not starting at all or actually stopping. So in other words, not being consistent with your investing and growing that wealth, buying because of FOMO, not understanding what you're investing in, making emotional decisions by not truly understanding what you are investing in and why you are making decisions, and lastly, under-diversifying or over-diversifying. Please check the description below. Join the FinMeUp channels, the Telegram channel, the WhatsApp groups. Subscribe to this channel for lots of free educational financial content, as well as check the few other links in the description where you can get discounts and coupons and vouchers for signing up with our relevant partners. I hope you have a great day. Let us know if we missed any of the other investing mistakes. You can let us know in the comments. Just say 6, 7, 8, or 9, whatever, and we share with the community. I hope you have a great day. My name is Hugo from Lyon. I work at FinMeUp. Lots more coming for you, including a very exciting 2022. Have a great day. Cheers.